All right, welcome to episode number 2 of Central Valley Mortgage News Podcast. I'm Chris Hall with Rate Mortgage, your Central Valley mortgage expert. One question I get asked all the time is how much do I need to have for a down payment to buy a house in the Central Valley? So for me, the Central Valley includes Stanislaus County, San Joaquin County primarily, and that's cities like Stockton, Tracy, Manteca, Ripon, where I'm home based, Turlock, where my office is based, Modesto, Riverbank, all those different towns all pretty much have the same requirements. That goes for all of California, and I am licensed in California, and we also can help people in all 50 states. So, what is the down payment requirement for you? That's really going to be something that we need to talk about one on one for most people. But for general rules, if you're a first time home buyer, in other words, you haven't owned a home for the past 3 years that you've lived in, you would be considered a first-time homebuyer. So if you had owned a home back in 2010 and sold it for whatever reason, and you haven't owned a home since then, your first-time homebuyer status, it resets. So it resets after 3 years. 3 years of no home ownership means you're a first-time homebuyer. So first-time homebuyers have some advantages. You can purchase a home with as little as 3% down, conventional, 3.5% down for FHA. FHA is a very popular loan for most first-time homebuyers. There's down payment assistance programs, a variety of different ones that'll cover that 3 or 3.5% for you. So how do we get the 3 or 3.5%? We take the sales price of the home times 3%. It's pretty simple math. So a $500,000 house, 3%, $15,000. That's the minimum down payment. So that's what you have to bring in. Now, does that money have to come out of your bank account? No, it doesn't. It can be provided by down payment assistance programs. You can borrow it from your 401k. You can get a gift if you have a rich uncle somewhere who's willing to help you out. And I say that all the time to my buyers. And you'd be surprised. Sometimes family members are very willing to help out their, siblings. It's fine, brothers, aunts, mom and dad, right? They can all be, valid sources of down payment. And we can get into the nuts and bolts of how to do a gift, but essentially that money never really even needs to change hands. It doesn't need to be given to you, given to the buyer. It can be sent directly to the title company. Very little paperwork needed on that. So those are gift funds. That's one very popular way that a lot of people are getting into their first homes right now. So let's say that you do own a home already and you're thinking about buying another one. You need to right size. I like to say right size rather than downsize or upsize because right size means something different for everybody, right? Moving, just because you're buying a house that's smaller doesn't mean it's a downsize. It could just be the right size for you. So you own a home now and you want to buy another one. A lot of people will sell that home and use that money for their purchase. You don't have to do that. If you can come up with as little as 5% down for conventional financing, as long as you qualify, you can buy another house to live in as your primary residence. So that's your minimum required down payment, 5%, if you already own a home and you're planning on living in another one. What you do with that other property, there's a lot of different options. You can keep it as a rental, and there's some additional things you need to do if you're going to keep your house as a rental. You can just keep it as an investment property. You can sell it later. You can do a bridge loan to buy the house before you sell your other one. So there's a lot of different options, and we offer most all of those here at Guaranteed Rate. And again, I'm a mortgage lender with Rate Mortgage. All right, so do you have to put more money down? Well, you don't have to, but you can. And obviously, the more money you put down, the less your monthly payment's going to be because you'll be borrowing less, right? So if you own a home and you want to buy another home and you don't have the down payment, can you get a gift? Yes, you can. You can get a gift from a family member and use that for the down payment on your new home. You can borrow from 401k. You can even borrow from your existing home if you have some equity in it through an equity line of credit. That is what we call secured funds. And that's something that is valid down payment money. Now, borrowing from credit cards, not going to be okay. You can't do that. But you can borrow from your house, your existing home. And we have a lot of people who do that, especially for people who bought, let's say in 2020 or maybe they refinanced, when interest rates were at 2 or 3%. Hard to let go of that mortgage, right? And a lot of people will be able to cash flow that property because the rents will exceed that low monthly payment on that low mortgage rate. Of course, you have to take the market rate on what home that you're purchasing. There's no distance rule either. Like, you can buy a house that's literally across the street from yours and live in it as a primary residence and still do 5% down. It just needs to make sense. Why are you moving there? It's because it's a bigger house, smaller house. It's got a pool. My old one didn't. Whatever the reason, and we could talk about that. But you can do that. For a down payment for an investment property. Now, that's where things can get a little bit higher. And I've talked about the DSCR program. Minimum down payment on that's usually 20%. For most people, they have to put a little bit more than that down on a DSCR program, which is a debt service coverage ratio. Basically a no income loan, just covers the property that you're buying. The payments have to cover the rent. The rent payments have to cover the mortgage payment. But the typical conventional investment property usually need at least 20% down. Now, those funds are not typically available through gift funds. There might be some programs out there that will allow it, but not many. You'll be very limited if you don't have your own down payment funds. But again, those down payment funds can come from a 401k. They can come from an investment account. You can save. You can borrow from your current home and use that to purchase investment properties. Those are all valid. Gift funds, again, you'll be very limited. There's a couple lenders that will allow it, but not many on investment properties. And really, that's the one barrier to most people who want to buy investment properties. It's coming up with that 20% down. So again, we'll take our $500,000 house, 20%, $100,000. So it's a pretty good chunk of change. If you have any questions or want to talk about your options, you can always reach out to me. You can call, you can text, you can email me. All my contact information is available here or on my blog at centralvalleymortgagenews.com. Again, I'm Chris Hall from Rate, and I look forward to speaking with you soon.